Boom, we are live, ladies and gentlemen, and we hope you are having yourselves a wonderful day, morning, afternoon, wherever you might be in the world. Be grateful for your problems because one day you won't have them. We're going to be diving into Bitcoin's price today, and what I want to do is be a bit more consistent and take a look at some of the smaller time frames and the minutia that's taking place, because there is a lot that goes on a day-to-day basis that does actually help, I guess, increase the outlook of our long-term perspective. And with that in mind, let's just open the charts open now. So here we can see Bitcoin again on the daily. We have the characterized bull flag that I've had drawn in here for quite some time now, almost since July. And as we zoom in, what is going to become apparent is actually this little purple line here. And I'm going to take off the bear claw. So for those of you that are new to the channel or not, you can go download any of our indicators for free. The bear claw is the one that I just removed right there. It is a stacked exponential moving average with the simple moving averages 200 and 300 on 14 on the outside. Now what I like about this particular moment right now is we are holding with volume right on the very ticker tape edge of the 21-day moving average. Now this is extremely important. We need to actually stay above this 21-day moving average here, otherwise we're likely going to come down, touch that $7,700 line one more time, and again increase the odds of the mid-November, I guess, swing that we're looking for. Now, a lot of people are going to remain bearish in this particular sentiment, and I'm going to take a look at one of my good friend's charts. I'm going to suggest that you follow him as well. There is nobody else on TradingView that I do follow. He's the only one. Maybe it's because he's a friend of mine, who knows, but I do like his analysis, and I'm going to use it as a comparison with mine. We do have differing opinions, although it brings us to very similar circumstances in the short and long term. Although the long term, it does start to spread out that distance between the models that we are both currently looking at. So I'm going to turn the bear claw back on here. Again, you can get any of these indicators that we create by following us on TradingView and downloading our indicators. So what is going to be fun here is actually going over, we are currently sitting in the log chart as well for Bitcoin, so this does give us a little bit more of an integrated time frame. It does start to appear a little bit more, especially our bull flag starts to bend in a little bit here, but I was playing with that earlier, so this is actually probably a bit more effective. Again, you can cut off the wicks for most of these things, as you see I've done on the top here. We did have some people ask questions about the likelihood of us going lower, and yes, there are those possibilities, especially down to around 6,900, 7,000, down here the 314-day simple moving average, which is also right at the very bottom of our bear flag, although that would likely indicate an invalidation of our bear flag. In the crypto markets, we do see a little bit sharper upticks and sharper downticks, so I'm not going to bet against it yet, even a tick down to 7,200, although I do stay fairly confident in my $7,900 to $7,700 range that we have held since the beginning of July. Now, as we move out to the weekly time frames, we start to see another interesting pattern emerge here as well. We have not actually touched the bottom of the bear claw, which is also a very important area for us to be watching, and that does also line up right around near the bottom of the bull flag, and the exponential moving average stacks here. At the top of the weekly, you can see that we do have volume on the Eagles crossing that has just crossed over, so I'll open that up now, make it a little more indicative. Now this is a moving average convergence and divergence chart that has a multi-time frame spectrum, so as you cross each of these lines, the velocity of the movement actually becomes significantly stronger, and that is important. Although we do see that crossover, and on the daily it does look like we are about to cross over on the middle range of this as well here. We will likely see that in the next week or two. I do believe we'll probably from here test the top of the EMAs as well as the simple moving averages around 8,900, and then before testing the 21-day moving average and there again. Now, to give you a little bit of some diverse perspective, hats off to the BTC Dyslexic, a good friend of mine, brilliant man and wonderful father, although he's not my dad, obviously. I'm just going to leave it at that. I really like his sentiment analysis here, and we do have a very similar alignment in our figures. Now I'm going to show you what he's done here and break it down for him. I'm sure he'll be happy. If you guys can, give him a follow, give him a like. I like this particular piece of content because it does line up with the sentiment that I have been looking at. Now here again we see a test of the bottom's 200 moving average, and on the right hand side the 2019 movement that we are in right now. So 2016 on the left, 2019 on the right, and the test of the simple moving average of the 200 area. Now on the daily, as you can see, we are actually below that 200 simple moving average, and I will just draw a red line here on it so it becomes more apparent. That's the 200 simple moving average, and it's right around 8,800. So we do need to close above that for this to take place, although I have speculated for the last few weeks that we would probably see an extension out into the mid of the first 2 weeks of November before that takes place. And this is where our sentiments line up. He actually has his first uptick into the next phase of the bull market, which is around 20,000, and I have the bull flag moving up to around 18 to 19,000. So the difference here is I actually thought that this was going to be a wave 5, which would bring us potentially as high as 50,000, and he does have that as well. Although I do think it's the end of wave 5, and he's got it drawn here as the top of wave 3, so this is where our models do start to separate. And I believe this would bring us out until about May 2020. I do currently believe, and again, I will change my assertion on this as we get closer, but I may potentially not, but at the particular moment, what I'm interested in is the May 2020 halvening, as well as some other current controversy that will be taking place in those markets at that time. So we both have a run somewhere up around the $50,000 aiming towards May, although we have got there with different assertions. I think that's a nice thing. It's not till the models go up further that we have drastically different viewpoints. He thinks we're going to go higher, and it's not him thinking this, by the way. Let me be very clear here. This is actually a replication of the 2016 bull market, basically retraced and redrawn over the markets that we see currently in 2019. So it's not his prediction, it is a fractal recognition of what happened in 2016 overlaid on the 2019 chart currently. Again, noticing the descending triangle with the quick drop down to around the 200 simple moving average, and then the continuation upwards. Now again, a big part of this is going to be a bunch of other questions that take place, but currently we do have a very similar sentiment analysis, so keep that in mind. We are agreeing. And that's always an important part, is when you find yourself in agreement with people who have a different way to model that same rendition of an idea. It likely means the experiment holds a little bit more weight. Now again, I do have stop losses set pretty tight here around 76.50, 76.20, because for me, I believe if we break this area, even the 314-day simple moving average won't do a whole lot. Now I want to take a look at some of the other tokens today, but more specifically, one of you guys asked why I hadn't been using the Fibonacci retracement tool as often as I had. It's mostly because we had already found a place that I was looking and interested in. We were actually butted up right into it now, which is the current 618, or sorry, the 0.5 of the Fibonacci area here, which was very strong support from some of our first takeoff waves. Now again, the important part here is that we are right at the middle ground of the retracement, and now you can actually draw these both ways. It does depend on which way you are marketing and charting your sentiment analysis. So technically we could draw from the bottom up and have this type of outlook here too, and you actually see a very, very similar sentiment, which is right around the 0.5. So at this moment, whether we're bearish or bullish is irrelevant, and this is one of the reasons why I wasn't drawing the Fibonacci sequence for those of you that had asked. Okay, now I want to dive in and take a look at Raven and Matic. So I am going to start off today with Matic. It was on the watch list for some of our Bear Den members previously. We saw huge runs out of that, although I was not able to capitalize on them because I was in the middle of my Raven trade. And even though I saw this trade progress, and so did many of the Bear members, as you can see, we already have this previous triangle drawn here. As soon as we broke out of this triangle, we got a lot of volume breaking out here. It's not until we move into the 45-minute chart that this becomes a little clearer, and we actually see the case for a potential bullish scenario again on Matic. Now, I want to be very clear here and say that none of this is financial advice. This is strictly for information and educational purposes only. So just to clear up this chart here, I'm actually going to turn off my fractals so it's a little cleaner, and I want to make sure that my Bear claw, yeah, there, perfect. Bear claw is still turned on. Easy peasy. So as you can see, we've actually bounced almost right off the bottom of the bear claw, which does also sit at the current 245-minute simple moving average, the 314 down here as well. Now the important part again is that we haven't broken below this exponential moving average, and this is an area of contention. Now the reason why this is an area of contention is because the stacked EMAs are a very influential way for the price market movements, especially for algorithmic bot trading, which there is a lot of in any market. So keeping an eye on the EMAs is a very important rendition of style. Now again, everyone that doesn't know how to trade technically likes to say that technical analysis is nothing but reading tea leaves, but there's more than single proofs in the pudding that they don't know what they're talking about, but we'll leave it at that. The next idea that I'm interested in here was also the breakout above this downward trend line that we had been following. We're actually following a trend line here too. You could consider this a bear flag, or sorry, a bull flag if you wanted as well, although not as clearly devised as what we see in Bitcoin lately. It does fit in that category, although on these smaller time frames I do not like to include them. So if we roll out to the 4-hour time frame here on Matic, you can see the same story. We bounced right off the bottom of the exponential moving average. We came up to the top. We still have not touched the 200 or the 21 simple moving average, and with the eagle's nest up above here, it's likely that we will come down to test that, which is approximately 174 satoshis. If we break through that, we'll hit 169, and this is the stop loss area. I would put, generally speaking, around 165. And again, not trading advice. I'm not in this trade, although it does look like it still has momentum and could produce big returns. It's not something I'm going to place bets on right now because I'm still currently in my Raven trade. Not that I'm in it. I actually exited around 400 satoshis after it went to 460. You would just go for the best potential gains. Is not always the highest point. As long as we're making gains, it's an effective trade strategy. So again, what's interesting here is on the weekly chart, you can see that we have, on the daily, excuse me. On the daily, we actually turned bullish here in the last bit of this ascending triangle, and we have remained bullish, at least in terms of our trade and trend indicators. We're butting right up against the bottom of the eagle's nest here, so I do suspect we will probably come down to test that 160, 175 Satoshi area. Again, if we break through that, it's no man's land, but if we bounce out of here, we could see another big wave in a potential of maybe, let's say, at least 20 to 50%. And again, from the bottom of the triangle that we've been watching in the bear den, even though I did not make this trade, it was a very easy 50%, and at some of its peaks around 60 to 70 in only a 4-day time frame. So Matic is moving quickly. There's a lot of great stuff behind this, great team as well. So it'll be interesting to keep an eye on. But more importantly for me, where I am right now, has been watching this Raven trade unfold for quite some time. For those of you that have been in the bear den for almost multiple years now, you know how beautiful I think this particular trade is. And as you can see right now, we're about to see a crossover, at least on the daily, of the 300 and 200 simple moving averages. This is not a great sign, technically speaking. It does likely spell we'll come down maybe to around 350 Satoshis, where I do have the bottom line indicator drawn here for what I actually consider to be the end of a wave one. Now, although again, this interesting part about Fibonacci impulse sequences is not always the easiest to count. You can see I've got a 1, a 2, a 3, a 4, and a 5. And now I believe this is actually going to be just a 1, a 2, a 3, 4, and a 5, and that would be the approximate 250% gain that we had been looking for since back here. You can find all of that information actually charted out here very beautifully by following us again on TradingView, by going to and following us at Arcane Bear. Yeah, tradingview.com/u/arcane-bear, and you can see our trading view, I guess, instant replay of this particular sentiment. And then, bam, there we go. Again, wave one went a little higher and further than I had thought, but that's not a bad thing. It went to 460. I had imagined it would go to around 420. So we could still see much higher gains here with Raven equaling in the few 100% range. Anyways, I'm going to leave it at that, ladies and gentlemen. Remember to give us a thumbs up if you like this content. If you're new and you want to learn how to trade, you want to save, invest, and grow your portfolio, we do offer our private members subscription group. It comes with a private community, a newsletter that I put a massive amount of time and energy into every month. We update the notes, and we're constantly updating the free content. And now, for anyone that signs up, for the next little while at least, you can have a 15-minute free consultation with that person on the other side of the screen, me, not you, and I can do my best to assess where you guys are in your portfolio growth, allocation, and in your trading and investment space, because there are so many different types of traders in this sector and investors. The one thing I like to do is be able to offer you guys somewhat of an individual, at least communication basis, to better help educate each individual bear family and bear member. Anyways, this is Tio with the Arcane Bear. I am going to be signing off for the rest of the evening. It's morning time for most of you guys, I'm sure. I am so ever deeply grateful for all the things I have to be grateful for, and on a more increasing basis, all the problems that I have as well, because I do know one day all will be taken away. And in these moments, regardless, the problems are often the obstacles that we need to overcome to provide the beautiful solutions and bring even a deeper depth of gratitude to the world that we live in. This is Tio with the Arcane Bear. Thank you guys all one last time, and we'll see you again on the other side.